Hello, hello. Can everybody hear me? Hello, hello. Yeah, I think so. Demonstrate. Yeah, me too. Me too. Me too. I think gold is a buy. I think so too. But the thing is that, right? Niklas, you still go long? Well, be careful, Murad. You know what? I was looking into possible re-entries in gold long, but it's very possible. I mean, after this big dump, right? I don't want to take an aggressive entry, right? I got stopped out of break even. Maybe what? All right, hold on. Why? Hold on. Aggressive in. My sound is just fine. So basically, what I'm looking at, right? What I'm looking at is possible re-entry. Yeah, I know it was your fault. So yeah, what I'm looking at is possible re-entry. I actually had planned on a 1936 buy stop re-entry, but I deleted it. Right now, perhaps the mistake that I made was not taking 1R at the highs above 1838, right? But that's fine. That's fine. Now I'm still looking for a re-entry long gold, but right now here it's in the middle of nowhere, right? And I'm possibly looking at the 1933 for a re-entry long here in gold, but here it's too aggressive. I don't have a setup. I don't have a setup to re-enter long gold, and yeah, I need to wait and see what happens here. All right, so this is the first one. Still looking for that silver, same thing, silver, and what I am looking at possibly for the open is a Nasdaq long on an F1 strategy setup right here. I mean this looks phenomenal actually. Now a couple of things here, right? The actual setup. Good morning, team. Yeah, I agree with you. Nasty, nasty, nasty rejection. I didn't start my show. I didn't start my live show because I was waiting for the break of the 1938. When the break of the 1938 happened, I had my stop losses at break even, and I started to set up my workspace for the show, etc. And I saw that big dump from the highs, and it was a little bit odd in the sense that there was no order block here or supply zone. Um, Let me see. Well, there was one, right? But yeah, nasty, nasty rejection. I'm still looking for longs in gold, and the thing is this, right? If we look at the 1 hour chart, if we look at, we have to go to a 3 hour chart, right? Maybe a little bit 4 hour chart. I don't know, 4 hour chart, right? This is a massive level that we're trading in right now. This is a massive key pivotal level in historic price action, right? And we are day trading right at the highs, right at the highs of a big rally. That's why there's a ton of selling pressure here, right? And that's why it's very difficult to to get in on a long or a buy in gold. And that's the other thing that I told you. Because of what I just told you, the mistake that I made was not taking 1R here at the highs when my trade was running at 1.5R, right? But I mean, this happened so quickly. I was just setting up my space for the show, but that's fine, right? So what I'm looking at here is possible Nasdaq longs. So a couple of things that I want to share with you right now. This was yesterday's Nasdaq long. That was an amazing long. Let me just delete all the drawings here. Right. So what I dig about this possible setup is the range, right? This is a very tight range that we're trading in, and yeah, I mean, I could take a an aggressive F1 entry, but I'm not going to. So basically, I am going to take a normal F1. Should 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 the Nasdaq hold these lows for a 2.5R. Now this is I'm gonna tag it red. Um, we need to wait and see what happens on pre-market, right? Um, the Russell is also, actually the Russell looks much better for a possible F1, but the risk to reward ratio on actually the risk to reward ratio on Russell is much better. But we need to see if if U.S. equities keep on breaking with the lows and printing new lows, then I'm definitely not going to take that F1 long. All right, gold. Gold. This was a possible F1 on gold long here, right? But I mean, if you saw my video yesterday about the F1 strategy, there is one rule that avoids, fake out. So here we had a fake out, right? Here we had a fake out, and the rule is, I mean, we trade true divergence, right? With the F1 strategy. So even with this breakout, and by looking at this chart, the F1 strategy chart, I should have definitely taken profits here. Why? Because if you look at it, there is absolutely still no divergence. So it's very possible that gold is going to drop to retest the lows and create that divergence before the move. So there is still possibility for us to get in long, right? So the thing is that we need to wait and see. There's still all right. Yeah, it happened very fast, but again, I should have taken 1R here. You know, what's done, it's done. So, the reason that I'm looking at possible longs below these lows is because of this, right? If you notice here, this low, right, that mitigated this, order block or demand zone, printed a new low, right? So there's two possibilities here, right? Gold keeps on rallying, and if gold keeps on rallying, then we will find an entry on a pullback, right? But if it doesn't, and price breaks with these lows, then the 1933 level would be an amazing entry. So right here around the 1933, with stop losses just below the structured lows. Right here, a little wide of a stop loss, if you ask me. But I mean, the risk to reward ratio to the session highs is about 8R. Getting a rounded bottom on pound yen on the 5 minute, maybe enter. All right, so good question. Personally, I have. Let's look at the pound yen. So this is what I have on the pound yen. I have. This is the 50-minute chart. I'm going to show you the hourly chart or so. So I have buy limits on the pound yen at the 160 level with stop losses below the structure low, right? Now I have 3 or 4 buy limits here, and I'm going to show you why. So basically, what I'm trying to trade. First of all, yesterday I was look. I mean, that signal was sent yesterday to the VAPs during the APAC session. So I was looking at this. This was all sell side liquidity, right? Uh, and what I'm looking at here now is just more liquidity being created, right? Again, this is in the middle of nowhere. To me, this is absolutely not the place to buy into this pullback. The reason being because what I like to do is, buy. I mean, if I'm going to buy or if I'm going to go long, of course I'm going to buy into weakness. But I'm going to buy into weakness uh, at the order block or the demand zone that created the previous break of the structure, which is this one right here. That's why I have my buy limits at the 160 level. My stop losses are a little bit wide at the 159.15. So 159.15. So below these lows, right? This is a quite a long. I mean, this is a. I mean, it's not a day trade, right? What I'm looking to trade here is not a day trade. My first targets are, of course, at the let me see, 160, 164. Actually, my first targets are the 164. Right? I'm gonna show you why. If we go to the 2-hour chart, etc. Hold on. We have a massive, 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 massive supply zone here. So I'm looking to get in, on a pullback for a break of the highs, a break of the level that is capping the upside in this market right now, and taking profits just below this massive, massive supply zone. That's my idea. That's my trade idea. That's what I'm looking to trade right now. I mean, if you're looking at the 5-minute chart and you are seeing, hold on, just delete everything here. Right, you are seeing a what? A rounded bottom. Yeah, I mean, to me, this is just a dead cat bounce. Yeah, I'm waiting for these lows to break in order to get filled at the 160 with quite a wide stop losses. Yeah, because I don't want to get stopped. I mean, I'm not keen on putting stop losses very tightly just below the zone that I'm trading. I like to put my stop losses below the previous structure lows if I'm going long. And the previous structure lows are quite wide from my entry. So, that means that my position size is just going to be a little bit smaller. right? So, what are you guys trading right now? And this is the thing. I mean, I really, really, really hate to try to place a long in goal at the moment, right? This is not my. This is absolutely not my spot. I learn more every time you do these sessions. Great explanation, man. Thanks for that. You're more than welcome, mate. You're more than welcome. This game is about patience, right? It's about patience. And yeah, like I was telling you yesterday, I'm pretty open with what I do with, my winners, my losers, and most importantly, the mistakes that I make, right? Because I think that by pointing out very, very strongly my mistakes, they're not that many, right? But for example, today, not taking one R at about the in 1938, that was a mistake, right? And pointing that out, I think helps you out more than just showing you my winners. All right, so Dash to Trade. Hi. Um, yeah, Dash to Trade. All right, so the thing about Dash to Trade, if you want updates from that project, you need to follow, the project's social media accounts, right? Do not, absolutely never, do not get into any Telegram group that says they're Dash to Trade. There's none. There's a lot of scams. It's insane how many scam groups have appeared, taking the name of the project. Now, yes, the token is down currently, but you need to remember that um, if you bought into the project like I did, I haven't even claimed my tokens yet. I haven't even claimed my tokens yet. You know, I need to do that actually. Shit, I need to do that. So if you're going to buy into a project, right? I mean, you're not going to buy into a project. Uh, wait for. I mean, buy into a project on the pre-sale, and then when trading starts or the token goes live, right? Just look for a sale, a quick sale. No, I mean, yeah, I mean, price of the token went down, and it is down quite a bit actually. But to be completely honest, I do still believe in this project. Why? Because we haven't launched the terminal yet, right? The trading terminal. And that is what is going to bring a ton of buyers, right? This trading terminal, mate. This trading terminal is going. It's going to revolution how you look for new projects, how you do, the work or the analysis on the cryptos that you want to trade or that you want to buy, because right now you have to go from one site to the other, right, to get that information. With the Dash to Trade terminal, you're going to get that information in one single place. So basically what we are going to launch is what you might know as the Reuters icon, or the Bloomberg, yeah, terminal for equities or currencies, but for crypto, right? And the only way that you're going to get access to that terminal is to pay a monthly fee, and the only way that to pay that a monthly fee is to pay it with Dash to Trade tokens. And because how powerful that terminal is going to be, a ton of people are going to use it. So that is going to bring a ton of buying pressure into the token. So this is not financial advice whatsoever, but personally, I am looking to buy a little bit more on these levels. Right? That's just me. That's just me. But you do what you want to do. Again, I mean, if you buy into a project, just wait for the project to be launched. All right, so yeah, I don't want to look at this chart anymore. I need to buy a new laptop. I mean, the battery on my laptop just died. All right, so I was looking at possible. All right, I was looking at possible USD CAD shorts using the F1 strategy tool, and I mean, it looks quite good. The thing. I mean, the thing that I don't like is this new high. This new high created a wider range, which means that the risk to reward ratio on a possible short is just, just. I mean, I don't know if it's a. I mean, it's a 1.2 risk to reward ratio on a true F1 strategy and I mean entry. Um, an aggressive entry would yield a 1.9 risk to reward ratio. Let's have a look at the USD because possibly we can actually trade that aggressively. Now, this is the DXY 50-minute chart. Oh man, I like the downside on the US dollar for today's session actually. So basically, I am possibly trading this setup, aggressive F1 strategy setup with half risk. Also was looking at the US dollar Mexican peso, same thing on the the USD Mexican peso is much cleaner. Right, let me just calculate the risk to reward ratio here. 2.5 R, 4.9 if I want to be really aggro, but I do not want to be really aggro. I don't know. Let's wait and see what happens. I mean, I, I think that the downside on the US dollar might be the trade for the open. Of course, that, I don't know. I mean, we need to wait and see. This is the reason that I don't trade pre-market, right? Because more often than not, more often than not, whenever I trade pre-market, I get stopped out, and then price just moves in my direction. So I always wait for the market open when it comes to the New York session. And you know, looking at this chart right now, this is the Nasdaq. I really still like the upside on the Nasdaq, but I'm possibly not. Yeah, I'm not gonna take an F1 strategy setup on the Nasdaq. Just have a look at this. Have a look at this, right? This is yesterday's. This is yesterday's New York session, right? Super big rally, right? Super big rally, and then we have quite the range. Then we have a very tight range during the Asian session, and we have a break of the lows of the Asian session during the London session, right? This to me, if yesterday hadn't been this bullish, to me, this would be I would be looking for shorts in this market, but because of how strong was the New York session yesterday on this market, I'm looking for longs. And if you notice here, uh, yep, if you notice here, this is just liquidity. And we have this demand zone, this order block. We have an imbalance here yet to be filled. So I am digging this possible long on the Nasdaq right here. With stop losses below the structural low. This is the thing, because of how volatile was that move yesterday, the structural low is, it yields quite a wide stop loss. Let's go lower. Yeah, I mean, I have to put my stop losses below the structural low. Actually, we do have another imbalance here. No, this imbalance has been filled. Yep, this is what I want to trade on the Nasdaq. So very possibly we'll be looking to trade alongside on the Nasdaq around the 11,774, 775. Um, you know, stop loss positioning. I think that putting my stop losses below the structural low is just too wide. So I am going to use the previous low at this level. That actually would yield a 5.6 R to the moves high. Yes, I do like this. Actually, I'm going to, you know, we are hips away from the New York Open, so I am not going to stay, live until the New York Open. But let's have a look at what we can trade for the New York Open, and I will be back for the New York Open. Well, what do you know? Yeah. So before I went live, right now, um, I had these 1936 buy stops here with stop losses below this low, targeting the highs, 143, no, 142. Yeah, it was about a 5.5 R. Right now, this trade would be running at a 2.3 R. You know, I can do this because this doesn't affect me, but I still don't like the upside in gold at these levels. I really, really, really don't. So, again, it's tagged. Um, what I'm looking for, I mean, possibly missed it, but I don't know. Mhm. Yeah, yeah, most definitely. Just have a look at this, right? I'm going to thicken this chart out for you guys, right? Now, again, um, newly printed lower low, and there is a massive, just a massive, massive, massive price inefficiency here. Just a massive price inefficiency, a gap, an imbalance, whatever you want to call it. So, I will be looking at the 1933 25 for longs in gold. And what I also dig about this possible setup is that uh, right now there is a ton of deep buyers here, here, and of course here. That is just sell side liquidity that, I mean, liquidity doesn't get, doesn't get taken out every single time. Eventually it does, right? But and that's the hard part of trading liquidity sweeps, right? And inefficiencies in the market because it's hard to time it. But what I dig about this setup is that I can put my stop losses below the structured low, right? And because this big imbalance or this big price inefficiency is very close to those structured lows, just have a look at how sellers are just dumping price uh, at the 1938.50 or so because it's very close to to my entry. The risk to reward ratio on this possible long is quite good. It's about a 6R. So I am going to place this trade. I am going to place this. Most definitely. Everything that I see here, all of these lows, is just liquidity. That's what I'm telling you that I really don't like, you know, hunting for long in gold at these levels. So, I mean, if price, dips here and continues to rally and breaks with the highs, all right, that's good. I'm not gonna be on the trade, and that's okay. But I believe that it's not a, it's not that I believe, but right now, after this dump, the highest probability trade to the upside, a buy trading goal is lower. So why don't we place this trade and just a look at the pound yen. Yeah. So the pound yen could rally from here, towards the 161 or so, and then drop to the 160. Uh, yeah. So I'm gonna place that gold. It's on the 1933. Hold on. What do you guys think about that? 1933.40. Yeah, 1933.40. All right, so um, why don't you tell me, guys? What are you trying? I need to buy a new computer. What are you trying to trade? What are you looking at? What have you traded today? So I'm gonna show you what I was looking at F1 strategy wise. Yeah, I'm not gonna take this. I mean, I would have gotten trigger short on the USD CAD on this super aggressive F1 strategy setup, but I am not taking that. I was looking at the Aussie CAD long. To be completely honest, I'm still looking for that. I am most definitely still looking at this possibility. It's actually looking very good. Right, key pivotal level, historic price action, right here. I'm gonna I'm gonna use another color actually. Hold on. Magenta. Why not? So, key pivotal level in historic price action. When it comes to the F1 strategy, right? Um, we always look for trending markets, right? And by looking at this chart, you might think that this is not a trending market, but this is an insight session. And after that insight session, we got that break of the highs. So this is extremely bullish. Now, we look for divergence, right? We look for true divergence, right? We don't look for divergence. When I say true divergence, I mean that we don't look for divergence from in this case, because we're looking at longs from the previous lows to our oscillator. We look from, the session lows. That's one of the rules that this strategy has that helps you keep you out of trading fake outs, right? We wait for the true divergence, and the true divergence is here, my friends. So, couple of things. Here, I'm actually liking this possible aggressive setup more so because of this. Let me show you. Right. Um, so we have the true divergence. And the cool thing about this is that the F1 strategy uses buy orders, stop orders, I'm sorry, stop orders. So you can place your orders, right? And if price just breaks with your stop loss level, you just delete that order, right? But this is looking very, very, very good. Yielding about 3R. Yes. So scratch what I was going to do on gold. I am going to place that order later in gold if price breaks with these lows and comes to mitigate, right, that imbalance in this order block. Of course, then I'm going to place it. But right now, I'm looking at this possible long on the Aussie CAD. Very, very, very good. Right. So right now it's 6 a.m. here. So it's what 8 a.m. New York time. This is the time of the day that I don't trade, but I wanted to do this live session just to go through possible setups with you guys, right? This is one that I do like a ton. This is a no-go. Yeah, I'm gonna place this one. All right, so there's a ton of things that I do like about this. First of all, the pullback move, right? The pullback move is super, super, super clean, extremely clean, right? Right to a key pivotal level in historic price action, right? I'm going to use yellow because I just didn't like the magenta color. So a pullback towards this key pivotal level, right? This is the level that we saw real sellers jumping into this market, and the pullback move um, is setting up. I'm sorry, is setting up for a good breakout. Should buying pressure start to jump in, right? Now, if price breaks with the lows, then I am not going to be on that trade. Also, what I dig about this red line right here is just the session open level. When that red line is red, it means that the market or the asset that I'm looking at is down for the day. When it's green, it means that it's up for the day. This is down for the day. When it's green, it means that it's up for the day. That doesn't really, it doesn't, I mean, it, I mean, I use it because if you note, I mean, for the F1 strategy, it has absolutely, I mean, it has value, but it's not one of the rules. The reason that I use it is because and you should also look at the open price, right? The session open price because I mean that the open price level also acts as a pivot, right? And what I dig about this is that the breakout is right on the break of that level, the pullback structure and our bias moving average. So I am going to place this buy stop on the Aussie CAD right now. Aussie CAD. I mean, and target should be at the 94.50. I'm just going to place that order, and if price breaks with the lows, I'll just delete it. I mean, I'm going to wait for this candle to close because it's looking very bearish. But you get the idea, right? You get the idea. So, any questions, guys? Any questions at all? Yep, yep, yep. Oh, I forgot about this. I was looking at possible shorts in Brent. This actually is looking very, very good also. Possible 6R, 6.5R. Yep. I'm not gonna go through. I'm not gonna go through Brent, but I've been looking and waiting for the reaction or possible rejection of that 88.50 in Brent. Of course, that I need price to take out these highs before I'm looking to go short. I agree with the Aussie CAD. I see CAD weakness with the news at 1:30 UK time. Actually, let's have a look at the economic calendar. Right, so we have Flash Services PMI. That's it. Yeah, I'm gonna place this. Let's have a look at that rejection. Now, if you look at the oscillator, right? There's one thing that I need to see, of course, is the break of these highs. But because I use pending orders with the F1 strategy, right? And the reason I use, stop orders is because I don't want to miss the breakout. This is a breakout strategy, right? And yeah, when this happens, it's very possible that we're going to get a ton of volatility to the upside if it plays out, right? So I don't want to miss it, so I'm going to place this trade 3R on the Aussie CAD. I'm going to risk 1%. Hold on. 0.75. I'm sorry. 0.75 on the Aussie CAD. Want to place that trade. 3R. Again, if price breaks with with that key pivotal level, I'm just going to delete the order, right? But I want to play. It looks very bearish, right? It looks. If you, just by looking at the candles, you can see that the selling pressure is quite strong here. But I still want to place, that pending order because I don't want to miss this, this possible trade or this possible setup, right? Because this is the one, the F1 for today. I'm sorry. So, 93, 93, 93, 91. My entry is 0.9391. Stop loss 93.75. 0.9375. Target 94.50. Yeah, 3R. There you go. There you go. See what I mean? What's your thought about the DXY USD? Oh boy, do I have a thought about the DXY? I'm gonna show you, mate. But before I show you, Crypto Danny, this is what I was telling you, right? You know, just have a look at how bearish this market still is, right? So, trying to catch a falling knife here in the middle of nowhere, has no edge. Right, so the DXY, I'm going to delete all of these. I'm actually, maybe, hold on. You know what? Doesn't matter. So, here's the dealio. Let's go to the daily chart first. Now, from the highs that the US dollar or the DXY printed in September last year to the lows, we have seen a pullback of about exactly 11.5%. I am still bullish on the USD. I'm still bullish, right? And I am actually looking for the deep buy for a swing trade. I'm sorry about that. I really need a new computer. Oh boy. Now, hold on. Let me go to the, I don't know, 4 day chart. Yeah, I mean, it really doesn't matter. When I go to the 4 day chart, 3 day chart, 1 day chart, etc., it's because I want to have the entire. I mean, I want to have the entire price action of of what I'm looking at without zooming in like this, right? So don't pay attention to that. Now, here's the highs. Now I need to change the color of this to black. So here's the highs. That was the level that was capping the upside in this market, right? Of course, that key pivotal levels or zones. They're not just straight lines on your chart. So here's a zone, right? From this week high to the top of that uh, body candle's body, right? So here's the zone. Now that I have drawn that zone, I can go to the daily chart, right? In my opinion, mates, we are going to possibly see a rally towards this level and another leg down. Why? Because more often, I mean, if you notice here, of course, for the past week worth of trading, the US dollar has been very choppy, ranging. Um, yes, I'm sending it to the VIP group. Hold on. I'm actually deleting that order. Tim, I'm gonna come back to the US dollar or the DXY in just a second. I am just going to show you. Um, I'm not deleting it yet, but yeah, I mean, I'm not. I haven't sent it yet, but very possibly will be deleting it. You know, breaking with the lows, breaking with the lows. This is just super bearish. And if you notice, even though there's divergence, in my instruments, right? Um, and this is the thing, it really doesn't matter if you trade the F1 strategy or not, but if you use oscillators, for your trading as indicators, understand that levels in the oscillator can remain overbought and oversold for a fucking long period of time. So not because price is diverging with what the oscillator is printing, and my oscillator is at its minimums, I am going to buy. Just a piece of advice. So the DXY, right? More often than not, this is super bullish, right? This is super bullish, and but more often than not, when it comes to deep buying, you're going to see this kind of reaction to the previous broken highs, right? These are the previous broken highs. Massive key pivotal level in straight price action. So of course that we're going to see buyers jump in here and also sellers taking profits, right? Both create buying pressure, but more often than not, mates, these lows are going to be taken out. These deep buyers, the people or the weak traders that buy at the previous broken highs or sell at the previous broken lows, are going to get fucked more often than not. Why? Because you have to pinpoint the exact zone that saw big orders jumping that created that breakout. So if you look at the candles here, these volatile candles here, I mean, this is the move that broke with that level. But big money or big orders were already in the market made. So just by eyeballing it, I will be looking for buys around the 98 level on the DXY. You know, uh, that's that's one of the things that I learned the hard way. Not buying the retest of the previous broken highs that uh, has no edge. Actually, the contrary, right? It has inverse edge, and more so because where are you going to put your stop losses, right? Normally, what weak players that do this, they place their stop losses below the previous week low, which is here. That is what I call, that is that liquidity that gets swept or swept, or I don't know how you say it in English, right? I really did a new computer. Shit. So, yeah, just look at, just try to find the order blocks, right? Um, yeah, I do believe, I am looking for that swing trade, that buy swing trade in the USD, but not here. Just not here. Not here. Not here. Let's go higher. This is the daily chart. Let's go to the 4-day chart. Yeah, just not here. Absolutely not here. If we look at what has happened, just by looking at price action itself, right? If this is the last sweep of the lows, this is where, the market changed its character, right? And here is a ton of traps. Then we have that break of the structure here that absolutely um, not justifies. What's the word in English? After the break of this high, right? This is where this market changed from bearish to possibly bullish. But after the break of the structure here, and here and here, the upside is the highest probability trade. Now, where the fuck are we going to buy the US dollar? That is the big ass question. Now, in my opinion, actually the 98 level is too low. Yeah, I would love, really, 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 I would really love here, right? Yeah, 98, 98.30 level. This is where I'm going to, if this plays out, this is where I'm going to get very big on US dollar buys. Because if this plays out, this entry model, it really doesn't matter what market you're looking at, right? Possibly lower, hold on. Yeah, 96. I don't know. I have to do I'm going to, actually, I'm going to make a video today after my trading session, right? About exactly this. But what I can tell you is that I am most definitely not looking to buy right now. To me, this is absolutely garbage. Garbage. More so because if you look at this is the 4-hour chart, mate. Just have a look at this. This is so fucking bearish. And here we have the first bull trap. Boom. Yeah, this was awesome. This was an amazing sell opportunity. Just have a look at this on the 4-hour chart. This is phenomenal. This is just phenomenal. This is just phenomenal in in the sense that, hold on, here we have an imbalance on the 4-hour chart, right? And if you notice here, all of these highs, this high hasn't been broken with this, my friends, just liquidity, right? So when I tell you that very possibly we're going to have a rally and then that break is absolutely very possible or plausible, right? Yeah, this is going to hurt a ton of people, right? Um, Actually, I actually made what I'm looking for is for that rally towards the 106.20, right? And here I'm going to sell hard the USD. Why? Because if this plays out, it means that my long-term scenario for buying lower is going to play out. So why the fuck wouldn't I trade the short side if this highs get taken out? Yeah, thank you for pointing this out, mate. Yeah, this is awesome. And what are you going to do with the USD? Day trading the USD right now sucks. Absolutely fucking sucks. Just look at this choppy range, right? Even if we go to the hourly, right? This is just a super stupid range. Yeah. So this is what I'm looking for. Higher on the GBP. Japanese yen buy limit still available? Yep. Let me see. Oh boy. Yeah, I don't know what you mean by still available, mate. But it hasn't been triggered for me. So I'm deleting the Aussie CAD buy stop with the F1 strategy. You know, and this is the cool thing about the F1 strategy, right? That um, when it violates one of the rules, you're not going to get stuck on a losing trade. I'm not saying that you're going to win every single fucking trade. No. But one of the things that I really wanted to create was, I'm sorry, a strategy that filtered out, fake outs, mediocre trades, etc. I might possibly still, all right. Just have a look at how price action is reacting to this level, right? So if you really want to be clear about the key pivotal level, it's this one right here. So let's have a look. Now, yeah, right now this market is super bearish, right? But well, the lower low that it created, we're talking about 4 pips, so it really doesn't matter. We still have that true divergence, and if price breaks with this pullback structure, and this is the thing, guys. This is the thing, right? When I look at the markets, it looks like it's going to continue lower, and that's fine. I'm not going to take that trade. But when I look at the markets, right, there's impulsive moves and there's pullback moves, and this is just a pullback move. There's no volatility in it. So, very possibly at this level, we're going to see, the break of the highs. And again, I'm not going to be super aggressive in the sense that not going to put my buy stops here. It's always going to be here, right? Because there's a couple of things that I need to see. One is the break of the pullback structure, though. Two is the this market getting back to the green, meaning above the daily open. Three, I need a break of this moving average. This moving average is very important for the F1 strategy. And yeah, that's it. So this is still very much alive. I am going to come back a little bit later. So this is this is DXY for me, man. GBP also hit the stop loss on the previous trade. What is telling the F1 strategy? Yeah, the GBP Aussie hit stop loss. So my GBP Aussie, I'm gonna tell you what I was trading, mate. So don't pay attention to any of the drawings here. I was trading the mitigation of this order block. I think it was on the hourly. I don't remember. No, maybe on the 10-minute chart. Hold on. No, it was on the hourly. That order block that I showed you. So yeah, I traded the upside, and yeah. I mean, I got stopped out, which is fine. It's fine. Now, the pound Aussie is a market that I don't trade very often, and I could look for a new long at the 175 level. Uh, Damn it! I swear to God, this drives me crazy. Where is it? Yeah, this would actually. Wow. This actually, this is not bad. This is not bad at all. 12R for a swing trade. How many pips we're talking about here? 500 pips. So I'm gonna place this as a swing trade for the swing trade VIP group. I'm gonna place it later. See, have a look at that Aussie CAD. All right, so the GBP Aussie on the F1 strategy. There was no setup on the F1 strategy on the GBP Aussie, mate. Yeah. Are you part of the F1 strategy? Do you trade the F1 strategy? Because, I mean, the F1 strategy was pointing out at a possible short on the GBP Aussie, but this is the thing. After, I mean, this is where I got long. All right, I'm gonna tell you. All right, I'm gonna tell you how I use the F1 strategy invalidations as possible bias for my trades. Right now, I was looking at that order block being mitigated again. Right on the pound Aussie. Right at the break of the highs, I got long, etc., etc., etc. Right. And I was looking at the F1 strategy too on the pound Aussie. So, the pound Aussie on the F1 strategy showed a possible short, right? But if you look at what's going on here, this is what the F1 strategy was yielding at the moment that I saw it, right? About a 1.68 R. But when price broke with these highs, created a new high, right? This setup was invalidated, even though we had a divergence, but a break above our bias, moving out, etc., 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 invalidated this setup, right? So that was also why I took that long on the pound Aussie. Now, I didn't. I didn't, pay too much attention to the economic calendar, right? Which was, I mean, it was okay, but yeah, that was what stopped me out. But that's fine. Let's have a look at gold again. Yeah. You know what? If it wasn't 6:30 a.m., I would be looking for a possible. No. Yeah. So that's how F1 invalidations help me to, for my other trades. So let's have a look at this Aussie CAD finally. Aussie CAD. hmm Yep, this is looking very good. I think this is going to be my trade for the day. Um, I'm not in love with price action here at the lows, but I do like this reaction to the key pivot level. So I'm going to place my buy stops again. And I mean, the reason that I deleted my buy stops earlier is because price broke with what was at that time my stop loss level right here. Hold on, was a long right here. This was my stop loss level. So price broke with that level, so I deleted that order. Now the risk to reward ratio on this trade is 2.5 R, 2.4 R, which is completely fine. Fine, fine, fine. Yep. So what's up, guys? I'm a little bit tired of not hearing from you. You know, this monologue is quite exhausting. You know what I was going to tell you earlier was that if it wasn't 6:30 a.m. here, I would have shorted gold. Yeah, at the 1939 level. Yeah, but I am not. Right, so this is looking good. Remember that I told you about that. hmm So this is the imbalance that I want to trade. Boom. Actually, I don't know, man. Thoughts on WTI? Oh shit. Um, yeah, I think I already talked about this. This is Brent. When it comes to crude oil, made the market that I trade is Brent. So I'm looking for shorts, or I was looking for shorts. You know, it has been a while since I traded crude. But you know, when I was going through my charts, I was looking at possible shorts here. On the okay, all right. So let's have a look. Let's have a look and let's wait at the reaction of this level. Very possibly, this is going to be taken out. All right. So very possibly, this level is going to be taken out. And I'm sorry about that. I swear to God, I'm gonna buy a new computer. Very possibly, these highs, above these highs. I mean, after price takes these highs, is where I would want to place my shorts. So basically, something like this with stop losses above the structure high and targets, of course. Uh, Actually, my targets would be here at the 8710 for a 7R. See this level, I mean, this order block or this supply zone, super weak. Super weak is going to be taken out. So this is a trap, right? This is also what it's a little bit difficult in the sense that, yeah, I mean, this market is in the short term bearish, right? But which supply zone are you going to trade, right? In my experience, always look for um, on a pullback, right? Because I'm looking for shorts, right, on a pullback. Uh, I always look for the last piece of, liquidity that is still alive. And if we have, a supply zone that hasn't been mitigated just yet, then that is the slam dunk setup. But yeah, I mean, shorts are what I would trade if I were to trade this market. All right, did I place my Aussie CAD or not? No, I didn't. I don't know if I'm going to place my Aussie CAD. If we get a new lower high, I most definitely will scratch this. And the reason is because if price breaks with the lows, right, that means that my possible stop loss is going to be wider and wider and wider, making my risk to reward ratio lower and lower and lower. And that is also because if price keeps, printing new lows, the upside, every time price prints new lows, the upside has a lower probability of success. So, yeah. Yeah, let's wait and see what happens here. So, see, here, this is WTI, the same level, on WTI just failed, right? So, yeah, I would most definitely look for that in WTI 8240, in Brent 8880 or so. Yeah, this, I'm very eager to get short on this market. Traders are going to get fucked right now. So, any questions, guys, before I log out? Um, all right, before I log out, a quick look at what I'm looking at for today. Um, Longs gold again. I'm gonna go through the actual setup again, but I think that you already know what I'm talking about. Yeah, I'm talking about price sweeping all the lows here, taking out all of this liquidity, mitigating that demand zone. So I'm gonna look because I want to get filled. Probably I will look to put on buy limits at the 1933.40 with stop losses below the structure low. Very possibly, and that is because I want to get filled, right? So very possibly I could get in on a little bit of a drawdown. So I am going to use a lower risk, 0.4% or so, because right. So because I want to get filled, I'm going to show you with the actual fucking indicator. So here below these lows, first targets, uh, 19, 1942 or so, right? So because I want to get filled, I would place my buy limits on the 1933.40 level, right? But because the actual demand zone is around the 1932.80, I might get on a little bit of a drawdown on this trade. So that's why I'm going to use 0.4 to 0.3% risk because of that, right? If I get on a drawdown, my trade gets on a drawdown and moves like this, then I'm going to add here, right, and make a full 0.6% risk maybe or so. Again, this is not my highest priority, but it's tagged red. Uh, ooh, mama. All right. So, the Nasdaq. The Nasdaq, this is the other one. So the Nasdaq mates again, same thing, right? Same thing. Mm, yeah, same thing. After price takes this lows, and if you notice, price keeps printing new lower lows, keeps printing new lower lows. So very possibly this is going to be a very nice bull trap, right? Because it looks like a falling wedge. I don't trade, patterns, right? But I mean, it looks like a falling wedge. So there's a ton of people that are going to try to buy this falling wedge before the breakout, which is super dumb, right? And very possibly what we're going to see is this, and then the actual move to the upside. So heads up to that sweep of the lows on the Nasdaq, you know. And the pound yen. Yeah, the pound yen is about to break with the lows, about to fill me in on my longs. It's 20 pips from my buy limits. I'm not gonna move my buy limits. The Aussie cat. Oh, sorry. All right, the Aussie cat. I'll I'll let you guys know. Very possibly we'll be placing again. Those buy stops. I just don't want to place them and to delete them. 5 minutes later. So if price doesn't break with the structure, at least this highs, right? To show a little bit of bullying, a little bit of buying, pressure, then yeah, I'm gonna scratch this setup. USD CAD, nope. USD CAD is a no go. I was looking at possible US dollar Mexican pesos too. The USD Mexican peso is a possible F1 short. This is going to be nice actually. Short. Yeah, possible 2.6 R short on the USD Mexican peso. Again, I'm not gonna trade pre-market, guys. Be careful with that. And yep, that's about it. Uh, that is about it. Right, price broke with the lows. That's good. That is good. All right, guys. And of course, hold on. Forgot to tag it. Red. Brent. Yep. Brent is looking good. I mean, uh, yeah. Let me see. Actually, yeah. Definitely need another leg up. Need these highs to. I mean, these highs need to break, and I'll keep you guys. I'll keep you guys. I mean, I'm gonna send. If I were to enter any of these setups, I mean, if you're a VIP, you're going to get them, right? Um, Again, gold. I told you that gold is not my priority today, but if this plays out, all right. So the reason that I'm telling you that gold is not my priority is because of what I showed you earlier, right? That level, that massive, massive level that the price is trading in. The higher time frame is maybe not the 4-day chart, but so here it is, right? It is a massive key pivot level in historic price action, something like this. I don't know, right? It is massive, right? If you notice here, after the break, this was during the pandemic. I think so. I don't know. No, this was. I don't know, right? Or no, this was during when the Russia-Ukraine war started. That was this breakout, right? So after that, right, this level was a level that buyers were trying to hold to keep price rallying, right? But again, they failed, and this is where big sellers jumped in the market. So this is an important key pivot level in historic price action. This is where we are right now. So they trade the upside in this market at such a strong level. I mean, you're going to find that it's very difficult to hold on to those long positions, right? Like we saw today, right? I mean, with that big dump, boom. So quite difficult to get in long at the moment in this market. But if I mean if the selling pressure makes for this level to break, um, the probability of this setup plus the risk to reward ratio that it yields is quite attractive. So I'm gonna keep you guys updated on that. And that's about it for me. Pound yen. The pound yen is about 14 pips to fill me in a long. That's good. Now, if you're a VIP, um, and if you are on the swing trade group, also, I need to share something with you on the pound yen. So, oh, I'm sorry, guys. Remove drawings. So basically, maybe not the hourly, maybe the 30-minute chart. Exactly. So, my entry is right here, long position on the 160. Why? Because I want to get filled. My stop loss is below the structure low. Targets are all the way up here, right? I mean, right here. So it's a 5R. So this is looking that it's going to play out, right? So very possibly this trade is going to draw down a little bit, right? So always plan your risk accordingly. Never risk more than 1% of your equity in any single trade. More so if it's not a setup that you have back tested, or if it is a signal that you're following, you know, with I mean, you don't have to risk 4% per trade to make money. I mean, that's not how you're going to make money. Risking 0.5, 0.7, 0.3%, depending on the probability of success of your trades. If you know the math and the probabilities behind the setup that you trade, that's how you make money, right? Me, this is I see this as a big opportunity for the next leg up in this market. Just have a look at this, right? Now let's go to the daily chart. Actually, no. Let's go to the weekly chart. So, oh boy, 160. So, just have a look at the potential to the upside in this market. So, if I get triggered, I mean, it looks like I'm going to get triggered at the 160, right? If I get triggered at the 160, um, and price starts to rally, right? My first targets are the 164. So here, 164. So right here in the middle of this weekly imbalance. So that is cool. I haven't seen that. That is awesome. Now, second target should be at the structure high on the weekly. So at the 170, right? But if, my friends, if these highs break, just have a look at the potential for that swing trade. We're talking about from the 160, we're talking about 3,000 pips at least to the 188. I mean, this is very. I mean, this is why. This is the reason that I've been hunting this long on the pound yen for a while, because I do want to get involved. I want to get involved. Before that breakout. So yeah, that is me. That is me, my friends. How do you join VIP? Well, mate, just go here. Just go here, and you can pay with any card. Let's look at the Aussie cat. I mean, I'm gonna wait for that for the break of the structure. I mean, I just don't want to place another buy stop to delete it because price printed a new low. But you know, it, it's still a 2.3 R. So no, it's less. It's a 2 R, a 2.10 R. Let's call it. So I'm still interested in this. I'm still interested in this. Now, I wouldn't trade a lower than a 1.75 R. With any trading system. So we are right there at the limit. Push it to the limit. Pound yen. Olympia just sent a signal on the VIP group on the Japanese yen. So if you want that, just subscribe now. It's still very much valid. I am looking at it at the moment. Right, so let's look at gold. Yeah. Yeah, it's absolutely burning money to get involved at these levels. Absolutely. So I'm gonna keep you updated on. I'm actually going to place a an alert here. Um, Only once crossing crossing up or down. Uh, 75 expiration tomorrow. Right, save. So I'm going to be alerted when price breaks with these lows, and I'm going to get in on that trade with the Aussie CAD. I am scratching this trade on the Aussie CAD. I mean, it's not worth it anymore. Price keeps just ripping lower and lower and lower. And this is what I was telling you, right? If you use an oscillator, right, for your trading, always remember that because the oscillator is at oversold territory, right, or at super lows or whatever you want to call it, it doesn't mean that it's a buy signal. Oscillators can remain oversold or overbought, depends on how the market is trending for a long period of time. So be careful with that, and let's look at what the hell. The Nasdaq. Z Nasdaq. Brent Nasdaq. Yep, again. I think I talked about this, right? Uh, yeah, yeah, I talked about this, so it doesn't matter. All right, guys. So thank you for joining me. Awesome, mate. Thank you. You are well. Welcome to the VIP group. Yeah. I do these shows every day. Some days during the London Open. Most days during the London Open. Today, I just didn't have the time. Um, I personally don't trade in the middle of the sessions. I trade the session open, right? Yeah, tomorrow I'll be on 30 minutes before the London Open if everything goes as planned. I don't think I'm going to be back for the New York Open. I'm a little bit tired. So I'm going to focus on my trading. And yeah, just a heads up to everything that. There you go. There you go. And you know what? Because this is such a strong level, you know, in historic price action, and the selling pressure is so strong that I am not going to take an aggressive approach to this possible long setup in gold in the sense that I'm not going to place a buy limit here, right? I'm not going to place a buy limit here. Yeah, just because how strong this level is, and the other reason is because with such a strong selling pressure, right? If these lows break, that is going to bring more selling, um, selling pressure, which means that yeah, no one knows if these levels are going to fail or not. So heads up to that. I'm going to keep you posted if you're a VIP or not. What's your city? Um, Thanks again. You're welcome. My city. What do you mean by that? Gold. Buy we have opportunity. uh, I don't know, mate. You do whatever the fuck you want to do. I did talk a ton about what I am going to do, and I just talked about it again. Um, yeah, I place. If you're not a VIP, I'm gonna tell you I placed a buy order here earlier. I failed to take profits at the highs, got stopped out at break even. Not looking to place another buy at these levels. This is just a choppy mess. I need price to take out all of these lows right here before I get involved again long gold. If this plays out, it's going to be amazing though. Vancouver in the house. Ah, tu parles français? Ah, c'est en Vancouver que les Canadiens parlent français ou c'est au Québec? Oh, je sais pas, mec. Yeah, I think it's in Quebec that they speak French, right? All right. So the pounds yens, the pounds yens is 8 pips from my buy limits. So today, yesterday the F1 strategy yield 20R, right? Today, the three possible setups that I was looking on the F1 strategy just got invalidated. But that's the cool thing about this strategy, made that it's going to keep you out of not optimal setups, which I dig. Ouais, au Québec. So, il y a beaucoup de personnes qui parlent français ici, apparemment. Donc, on va faire ces sessions en français. OK? On va faire ces sessions en français. Et tu sais quoi? Il y a, la dernière fois que j'ai vraiment parlé en français avec quelqu'un, ça fait quoi? Ça fait à peu près 10 ans. Yeah, ça fait à peu près 10 années que j'ai pas discuté, que j'ai pas parlé en français avec quelqu'un. Ouais. Mais apparemment, parler français, c'est comme conduire une bicycle. You never, 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 never forget it. All right, so it's 7 a.m. here, so that means it's 9 a.m. No, 9 a.m. New York time. Let's have a look. Maybe I'm going to stay for the open. If it's 9 a.m. New York, it's 8 a.m. New York time, so I'm not staying for the open. Just a quick last look at what I am looking for, right? I'm looking for that sweep of the lows on the Nasdaq. I am looking for that sweep of the highs on these highs on a Brent. GBP yen, I see divergence on the 5 minutes. I don't know. This is the thing, mate. I mean, this is the thing. I told you. I mean, I don't see divergence here. This is just a very, very strong bearish market at the moment. Having said that, I am looking to get triggered for fuck's sakes. So long. Oh boy, maybe I'm going to. All right, I'm going to. This is going to be the last fucking time I'm going to place that buy stop in the Aussie CAD. Now, let me just calculate the risk to reward ratio on this, just to see if it's a 1.65 risk to reward ratio. Um, I'm going to take it. You know what? You know what? You know what? You know what? Oh, let me think about it, mate, just for a second. Let me have a look at this chart. Mm. Just a second, guys. Just looking at something. Yeah. So, so. This is not an F1 strategy setup. No, I'm not gonna take it. Discipline is key in this fucking game. I'm not gonna take it. This is not an F1 strategy setup. This is absolutely not an F1 strategy setup. I will be just pushing it, which is something that I don't do. Right. So last look at what I am looking at. Ooh, US dollar, Swiss franc. Look at this fucking thing. I mean, I don't trade the Swiss franc, so I don't care about this. Aussie USD. Nope. Pound yen. I'm about to get triggered on the pound yen. So 5 pips. Yeah, I mean, this Aussie CAD is just not an F1 strategy setup anymore, so I'm not gonna take it. You know, discipline is so key here. Fuck, I need a new computer. Uh, um, Aussie, Nasdaq. All right, so for the open, it's in about. If I were to go live for the open, I would have to go live within an hour. I'm not gonna do it. Right, so heads up to this. Now, actually, now that I'm looking at the 10-minute chart, actually, I was looking at the what? 5-minute chart. Yeah, there is a ton of room here to the downside. Um, scratch this. Actually, you know what? I'm going to remove all the drawings. This is very possibly a zone that is going to fail should price break with these lows, and if that happens, um, Yeah. All right. So, this is what I'm thinking, guys. This is what I'm thinking. Hold on. So these were the previous. Hold on. Let me change the color. I'm gonna use blue. These were the previous highs, right? If those were the previous highs, I'm gonna use the wicks of the candles to pinpoint the real highs. If those were the previous highs, right? Um, I would in fact be looking at a weak retest of the previous broken highs. This creates a liquidity, and here, and that bull trap is where I would love to enter long on the Nasdaq. So, yeah, my game plan on the Nasdaq has changed quite drastically, quite drastically. Instead of the 11, I don't remember what level I was talking about. I think it was the 11770 or something, or 1175 or 11760. Yeah, I'm looking for a deeper pullback. I don't know if it's going to happen or play out because we're talking about a 1.52% move to the downside. That's quite big, right? But that is, or that would be my optimal setup, right? In the sense that not only that, just have a look at all of this, price inefficiencies after this massive volatile move to the upside that happened yesterday. Yeah, yesterday. So there's a ton of things, magnets here to the downside, and also that's why, I was telling you about that. It looks like a falling wedge right at the previous lows. So pre-market traders that buy here are going to get trapped. Everything might play out as I am telling you, and if it doesn't, I'm not going to get involved. But I'd rather not trade a non-optimal setup and only trade a high probability setup. So what? Just to finish up with this, right? What I would look for, right, to get involved long on the Nasdaq, long only, right, would be right, a dip at the open, right, a dump at the open. Then hold on. Oh boy. Then yeah, deep buyers at the previous broken highs trying to buy this. That creates sell side liquidity before the fill of this inefficiency and the mitigation of this order block or demand zone. And here is where my optimal long would be on the Nasdaq. Yep, that's the only way I would get involved. Actually, I am going to tag this yellow. Um, I'm not going to trade, crude oil. That was just for you guys. And um, looking at the higher time frames in gold, just looking at the higher time frames in gold. All right, let's do a quick analysis in price action here, right? Let's look at the last sweep of the lows, right? So I'm looking at the last sweep of the lows because this market was, in fact, in the short term, kind of bearish, a little bit choppy, non-directional, but more to the downside. So what I look for is the last sweep of the lows, right? I got filled long on the pound yen. Vietnam in the house. Tell us what you will doing in gold. Well, sorry, I was zoomed way in and deleted that comment. Don't worry, mate. That is just fine. So let's have a look. Right, this market was a little bit non-directional. This gold, right on the 10-minute chart, was a little bit non-directional, but still printing lower lows and lower highs, right? So in the short term, let's call it short term, right? This market was bearish. The last sweep of the lows or last break of the lows was here. This moved to the downside. This means that we need to look at the previous higher high, lower high. Here is that supply zone that created. I'm eyeballing it, guys. I'm eyeballing it, right? That supply zone that created that break of or the last sweep of the lows. As you can see, that supply zone did not hold or failed. That means that at this high here is where this market changed its character from, neutral bearish to actual bullish, right? Now, with this break of the highs, the upside in this market has been confirmed, right? By looking at the 10-minute chart, guys, by looking at the 10-minute chart, I can see that, buying these lows around the 1935 level or so, whatever, right? I'm going to delete this, was a little bit enthusiast, right? Was a little bit enthusiast in the sense that there's absolutely no level to trade from, right? And one, we have that big ass, historic key pivotal level, right, on the higher time frames. And two, we have quite a few unmitigated zones here. Also, we have a ton of liquidity here. So, looking at the 10-minute chart, right? Yeah, I would most definitely look for buys around the 128 level in gold. So here's where I would look for buys. This is just not a level that I'm interested in trading anymore. This is just choppy, man. And going long the way that I did was just fighting such a strong bearish pressure. So strong bearish pressure. So it's one, it absolutely has no edge, and two, because I am looking for a pullback towards the 128, 127 level. That doesn't mean I'm going to trade the downside in this market. I trade with a trend. I don't trade reversals. Even if we get a break of the lows, then a mitigation of this supply zone for a pullback towards my level, I will not trade it. Actually, I'm going to I'm going to delete that, hold on, this alert, delete, yes. Now I want to get alerted here. Crossing value, yeah, that's fine. 28, set, save. All right, so this is what this is what I would want to do. So let's have a look at that power buy zone, if there should be one. Something in this vicinity. 128, that's fine. So, yep, that's what I want to do. Now, if price just rips higher, right, and breaks you with a 142, well, more power to you, mate. Then I will look for deep buys or buying on a pullback higher. But right now, this is absolutely garbage level for me, right? So I am going to tag this yellow. I'm gonna untag crude oil. Not interested in trading this at all. And same thing on the Nasdaq. 10-minute chart. Same thing on the Nasdaq. I'm going to just put on an alert here. Let me see how many alerts do I have live. I'm going to delete that. Yes. And that. Yes. So I have an alert on gold on the Nasdaq. What other market was I looking at? I'm already long the pound yen. I just got triggered pound yen long, the pound yen long. So the Nasdaq gold. What was the other one? I don't remember. Oh shit! Don't tell me. Should I? Would I? No, I'm not gonna take it. Not gonna take it. Why? Even though I've been hunting this trade all fucking day long, I'm not gonna take it because the risk to reward ratio is not uh, that good. I mean, it's still 1 to 6 risk to reward ratio, or 1.6 R. This is massively bullish, breaking with those levels, but the range between the lows and my entry is quite wide, right? It's about 30 pips. So volatility, right, on the initial breakout move might dry up after triggering me in, which means that I could in fact look at a drawdown. More so if you look at my instruments, right? Just have a look where my oscillator is. So basically, at the moment of my possible entry above those highs, but my oscillator would in fact show me that the buying or the bullish volume or the bullish pressure might have dried up. So that's one thing about the iPhone strategy. We always, I mean, there's a ton of subtleties with this strategy that make it so powerful, right? Yeah. But I mean, you have to be disciplined in order to trade it, right? But there you go. So got trigger 160 long the pound yen. I am long the pound yen now, 160. Boom, there you go. I got triggered here. It would be fucking awesome that that this market just continue to rally and breaking with the highs and continue to, print new highs, new higher lows, right? And me getting on that trade with zero drawdown, but that is wishful thinking, my friends. Very possibly I will get on a bit of a drawdown, but remember that this is not a day trade. This is more of a swing trade. That's why my stop losses are that wide. Right. So yeah, that's it, mates. Thank you for joining me. I'll be back tomorrow. For the Open, I mean, I don't know if it's going to play out for the Open, but you know what? These two markets are extremely volatile at the Open, and let's have a look from right now current price. It's just a 0.4% move to the downside that I need in gold in order to get triggered. Not triggered because I haven't placed my order yet, but in order to get alerted, let's call it, right, to look for those longs. So that is not far-fetched, right? It is not far-fetched for the open. Uh, the Nasdaq, however, it's a little bit more far-fetched in the sense that we'll be looking at a 1.30% move to the downside, which I mean, which is possible, but it's more probable that gold is going to set me up for a buy around the 127.50, 128 or so. Yep. So that's me, guys. Thank you for joining me. Thank you again, Tian Chu Lu, for joining the VIP group. Welcome to the VIP group. And yep, have a great trading day. Be safe out there. The markets are fucking crazy. And always manage your risk. Never risk more than 1% per trade. Again, never risk more. I mean, to be completely honest, shouldn't be risking more than 0.5% per trade because the main goal is to create a long term. Because what's the one thing that is, that is not letting you make real money in the markets? Capital. And the only way to get capital is to create an amazing long-term equity curve to show investors to get capital under management, and that is where you become free, right? So focus on that. You're not going to make a living out of trading a $10,000 account, and if you want to turn it into 7 millions, you might as well go to the casino, right? Um, right? Always think about that. And don't be results oriented either. The outcome, fucking computer, the outcome of your last few trades really don't matter, right? They really don't matter because if you understand, if you know the math and the probabilities behind the setups that you trade, losing one trade, two trade, three trades, etc., really doesn't matter because by taking the same trade over and over and over on a vacuum, you will print money, and that's what's important, right? Uh, who the fuck cares if my trade today on the pound Aussie hit stop loss? I would take that trade every single time, right? So that's me. Heads up to the VAPs on that possible gold. The Nasdaq is a little bit more far-fetched, like I told you, but still looking at it. Just let's look on the equities again. Same thing. Yesterday, just have a look at this. Yesterday, this was my long on the S&P 500. Yesterday, I love to. That's why I don't delete my stuff. This was my long on the S&P 500 yesterday. As you can see, it didn't fill me in for one tick on my MT4. Yeah, so that happens also. Doesn't matter. Doesn't matter. It doesn't fucking matter. That was an awesome, awesome trade. This one too. So on the S&P 500, I'm gonna delete all the drawings. On the S&P 500, same thing. Looking at weak players getting trapped. This looks even better. Looking at weak players getting trapped. Boom! Before I get involved long on the S&P 500, I'm actually going to tag it too because I think that this possible setups on U.S. equities might yield a good swing trade. So the Dow is this was an amazing trade on the Dow. Was a 12R on the Dow. Yeah. So another thing that I need to learn how to do is at least a little piece of my trade run, right? But that's just me fucking around. So having said that, hold on. Let's see from current prices. You know what? The Dow might actually be the one that creates the setup in the sense that um, the move towards my zone is less than 0.5%. Oh, 0.75. No, yeah. And when it comes to U.S. equities, I'd rather trade the Russell than than the Dow. So might be the Nasdaq or might be the S&P 500. And yeah, heads up to gold. So thank you for joining me. Have a great day. Cheers.